Welcome to the All Things Wildfire podcast, where we delve into the latest trends and hot topics in protecting properties against wildfire. So sit back, relax, and join us as we arm you against disaster.
Thank you, everyone, for joining us on another session of All Things Wildfire. Today, we have a special guest with regards to wildfire insurance and how to make us all more insurable. And look, guys, I think there's so much happening right now. Washington currently is hugely on fire, which is a disaster. But understanding that being proactive is crucial in understanding that it's a matter of time when it's going to reach our neighborhoods. It's a matter of time when it's going to reach our streets. And so being as prepared as possible is crucial, in addition to being insured. So Andrew Engler, thank you so much for joining us, brother. And Andrew's with Rock Rose Risk. And Andrew, I'll let you introduce your company and exactly what you do.
Yeah, thanks so much for having me. Give you a background. We're a retail insurance broker that's specifically focused in wildfire, work with 27 different carriers, and our job is to essentially translate the work that's been done to mitigate a property so someone gets a discount to pay for that work to continue to get done, or help them understand what they can do to get a much more affordable insurance, and working across both commercial properties and homeowners now.
Awesome. Andrew, so what areas are you currently offering this in? What states?
We get most of our business from California, Nevada, and Colorado.
Okay. Fair enough. Now, Andrew, let me ask you, because people have been calling us saying, hey, if I do my home hardening, if I do 0 to 5 clearance, if I do some of these things, will the carriers give me a discount? And here's my understanding, and I'll let you kind of elaborate a little bit more. In some cases, the homeowners are not necessarily giving a discount. They're just saying, hey, if you do these things, you qualify for insurability, number one. Number two, if we do insure you and you can prove that you've done these things, then in California, if you've done these things, you can potentially qualify for some discounted percentage of the actual rate. Does that make sense? Is that kind of how it works?
Yeah. Yeah, look, we're kind of in the Wild West days right now. So it's still very early days in being able to create a systematic way for the insurance market to measure that affective risk. So how much have I reduced the probability of this one structure burning down? And that's where, we kind of created the entire company because we kept seeing this need for it, which is there isn't a very strong a macro view, we call it. So if we're working in like Incline Village, understanding, okay, what is the overall work that's been done in Incline Village by the Tahoe Fund, by Chief Summers up there, by the utilities, Nevada Energy. Where are the fuel breaks being done? Where are the major issues? That's the first part. And I think, just to take a step back, carriers, I think there's a common misconception that carriers are, less intelligent or stubborn in the way that they view risk. They just view risk in inherently a conservative manner because it's a balance sheet and it's also a marketplace. So it's important to understand where they're coming from. Yeah, they used to just model this stuff at like a statewide level. It's mostly not true anymore. Now, where this becomes important is, do they model it understanding like what county work was done in a random hillside that might be a mile away? And even though it's a mile away, that's probably the most important hillside because that's where the box canyon might be, where the fire breaks out and becomes uncontrollable. No. And so that's where we kind of step in and found a huge hole in the market. And so first, take that macro view, understand it, translate it to what effectiveness has this had in being able to give the fire department infrastructure a chance at suppressing this. So stopping this rapid movement. It's still going to burn, but you need to stop this massive compounding where it moves from wildland into urban and then structure to structure. And then the second part we do is what we call micro. So we have the macro part and then we have micro, which is look at the individual parcels and understand what work has been done there. Exactly what you're saying. Zone 0, Class A roof, make sure to cover your vents, simple stuff like that. And then trying to do that across a neighborhood. So call it 20 homes, 50 homes, 100, 200, or a large HOA. because that is where you get some sort of major effectiveness in being able to make this a much more hardened asset and structure that, even though there may be spot fires in the area, it's something that's fightable by the fire infrastructure and fire departments. And so that is where you can actually see massive discounts. And across our portfolio, every client we've had, the average discount now is around 35%. And so it's a significant amount that
Wow.
that we're seeing.
Yeah, that is. I love that. Um, Andrew, so a couple things. A couple of thoughts I have here based on what you just said. If a community, 20 homes, 50 homes, if an HOA community has a Firewise designation, does that help your position with the carriers? Number one. Number two, um, understanding that they have that Firewise designation, what percentage, or is there a percentage of those 20 or 50 homes that you're looking for that have done some sort of prevention in order for your case to be brought to the carrier to say this HOA has been responsible and they've lowered their risk? I'm sure it's difficult to get 100% of engagement from all the homeowners, but is there an equation that works?
It's such a good question. The reason why the Firewise Council is so great is not because it puts a stamp. It's because it shows that there's a community group or a leader in that group that is going to help us implement this, which is the
Got it.
critical part. Like, what is it? It's scalability and being able to translate this to enough people from someone who lives in the community in the neighborhood, which is where we see the most effectiveness. So, Firewise, Fire Safe Councils, these are incredible vehicles, and they're also just heroes. Like, it's generally a person who's like doing this in their free time just to be a good person. And so what we've seen is, yeah, you can sometimes see like, oh, if are you Firewise, you get a 5% discount. Again, I don't know how much that helps anyone. What we look at it as is, okay, now we have like our group that's going to be able to kind of like relay the message. And to your point, it almost looks like any technology adoption curve, if you've ever seen those. You have your early adopters, and then you have like your middle group, which is the mass adoption. Then you have your like late adopters, the people who wait forever to get their first iPhone. And that's kind of where we see it. It's actually the minority that will be those last adopters there, and especially if it's in a community that's pretty heavily at risk for wildfire. So take Topanga Canyon, like the incline villages, Napas, Sonomas. They are very forward thinking. It's very rare to actually walk in there and find someone stubborn enough to go like, this place isn't going to burn. It's going to be fine. And like, I don't want anything done. And so when you look at the percentages of it, kind of always just looking at a Pareto principle, like let's get 80% of this work done in a
Yeah.
concentration here. And the nice part is we're very much not walking with a stick. We're coming in with a carrot, which is, hey, would you like $3,000 back on your insurance this year, or way more? Like if you look at these HOAs we work with, um, you know, the we've seen ones like in McLeod up in Incline Village where it's they're going from 1.3 million a year to 900,000, and now it'll probably be about 400 and $500,000 a year. So significant capital back to get this work done.
Wow. Okay, that's awesome. And I think, like I live in a HOA and I'm going to be talking to the president now and just finding out like where do we stand with the insurance, because we are a Firewise community. I do have, like, I'm in charge over
Yeah.
there too, like, to kind of help like, we have 74 homes. Um, but the reason I ask is as far as the engagement, it's still tough, Andrew. Like I'm trying to like get all of us on board, you know what I'm saying? And some people are like, yeah, we got a wildfire problem, but you know, the fire department's down the street. So do we have anything to really worry about? And I'm like, you guys don't get it. Like, as soon as the winds kick in and we got like, it is happening. Like we are on fire. But what have you done, or what have you seen people do to help, um, get people more engaged? And so we do have a lot of property managers that listen in to this podcast that really want this, want to see this engagement too. We have carriers listening, brokers listening, and I think they all deal with this struggle of like, darn, if we can get more engagement of the people, and we can go neighbor to neighbor, but what have you seen work, I guess, is the question.
I have a
That was
complete
a long
unfair
pause, man.
advantage
Come on. Like,
compared to
what's
you, which is
going on, Andrew? Come on. Come on. Is it that big of a problem?
No, look, it's an unfair advantage because, like, what's the one thing that moves everyone? It's money. Like, it's the
Yeah.
affordability to get this done. If the equation
Okay.
is, yeah, I got to move this manzanita tree out of my property and it's going to cost 7 grand and I'm on Social Security, or like,
Oof.
I don't have that money. So
Gotcha.
if we all keep burying our heads in the sand and going like, yeah, we have to. This is an infrastructure problem at its core. It is an infrastructure problem that, like, we have always an adapting environment. We built a ton of homes probably in the 1950s, 60s on up to the 90s. Things were different. We just built things differently. And now we need to figure out a way to harden those assets to a changing environment. And that's where I think, look, it is very hard to go, let me convince you to do something on the event that's going to happen once every 100 years, or you probably think once every 500 relatively in your mind, and you're like, I'm going to sell the home next year. So no one ever wants to pay insurance. It's why they force it. They make it legal for you not to have it on your car insurance. And here's a good fact. Still, there's, like, I think a 30% uninsurance rate in, like, California. So it's illegal to drive without insurance, and still. So I keep looking at that and going, all right, you got to switch that equation and go, the
Yep.
only thing people hate giving away money to more than taxes is probably insurance companies. So if you're walking in and going, I'm going to get you $3,000 back on your policy, I'm going to get you $30,000 back, whatever it is, it's just such an easier way to get this done. And then I think there's a lot of new creative things. Give a shout out to the guys at Pillar. They're looking at doing low cost HELOCs, low interest HELOCs with credit unions. So, like, easy lending products to get this done. And then, like, what we're looking at, where we're, acquiring, tree trimming and roofing businesses and stuff like that, where it's like, you have to be able to subsidize this work over time and take a very long-term horizon of it. And we're actually seeing, unfortunately, kind of the opposite. I think there's so many good actors out there, and BurnBot's much more on, like, doing the large
Yep.
scale fuel reduction and doing it at these incredibly cost effective prices. But, we see it commonly where it's like, you get a tree trimmer and they go, yeah, total cost of that job is maybe $2,000. I'm like, yeah, but I know this whole place is freaking out about wildfire. I can charge 6,000, 7,000, 8,000. And so you got to fix that problem. Otherwise it's a non-starter.
Got it. Got it. Okay. Well said. Well said. Thank you for sharing. Um, let's talk a little bit about the macro view and BurnBot specifically. We've had BurnBot on our podcast, and I know that you were also an advisor for BurnBot years ago, and probably still very connected. Let's talk about what they do and what you look at with conjunct. Like, how are you? They're a partner, and how is what they're doing aligning your strategic location as to where you're able to better provide insurability for homeowners and commercial properties as well.
Yeah, I mean, at the end of the day, we look at it as a physics-based problem. Fire is fuel, heat, oxygen. So you remove one of those elements, you're going to fundamentally reduce the probability of that happening. And so fuel is obviously a huge piece of that. And look, again, this is my personal opinion. So I take it as you will. I think we're very much in this position we're at because fire is incredibly natural and important part of our ecosystem. It's the way our forests clean themselves out. So if you suppress them from happening, like, nature will find a way, no matter what, it will find a way. So I found very few options aside from, you have to figure out a way to get a garbage disposal going through a forest and get rid of dead brush. Now, whether that's controlled burns, whether that's mastication, there's a million tools for the right job. And so that's what I've been obsessed with BurnBot being able to do, which is two critical things. One, being able to figure out the right tool for the job. It's not, even though it's their name, like, I think it's actually the minority of their business now, these controlled fuel burns. And the second part is, it has to be affordable. And, I think the part everyone skipped over is, yeah, it was still one of our most effective ways of controlling fire, which was fuel reduction. The only problem is, like, the affordable way of doing it in California was like, all right, let's just go raid the prison system and, like, basically use slave labor for free to, like, do this, which is inherently not scalable. And being the tech hub of, the world, it was such an incredible insight that Anacle had, and looking at it going, there's got to be a way for us to use robotics, use technology here to make this scalable and affordable at a large scale. And I'm like most, I've looked at 200 separate mitigation companies probably at this point. It seems very like improbable at first. You're like, all right, will this really happen? And it took me going out and seeing just one time, like them doing, I think it was the Stanislaus National Forest, and they'd done thousands of acres in a fraction of the cost that it would have been done. And you go, oh my God. And also, the first time they do it is the most expensive. That's the most heavy. If you can actually
Right.
upkeep it and do it, it is so much more affordable. And I think that that becomes like, all right, this is our first line of defense here, which is, can we reduce that huge amount of momentum we've seen built up in energy release by letting a forest not burn for 100 years? Can you actually reduce part of that? And then that puts us in a much better space to like start doing a multitude of other things like, suppression systems and retardants and, a litany of other projects that you can use.
Yeah. Okay, that's good. That's good. Let's I think there's a couple things places I can go, but I do want to hit on fuel reduction and how we spoke earlier, like that is an ongoing process. Like you could manage your fuel at your property level or even your HOA level, but that is going to be an annual thing that has to be done to minimize your risk. Um, and what are you seeing there as far as either the HOAs or the carriers? So let's talk about the carriers, right? Are the carriers saying, "Hey, Andrew, we're going to go ahead and yep, we're going to take on this risk. Yep, we'll take it. Looks good." Are they every year looking at what has changed, and are they asking you for new data with regards to fuel, for example, right? Because once you do the home hardening and you do 0 to 5, and maybe you do gravel and maybe you protect your vents and all that, those are one-time things for the most part. But managing the fuel around your property is ongoing. What are the carriers saying to you about that?
So first, the big secret is it's not like charitable work that the carriers are doing. And to be clear, the carriers absolutely do care. I've been on so many panels where like their top level executives coming out in the field, and like Mercury is a great example of this. Where like they are nonstop in every community trying to figure this out and trying to figure out how to make it more insurable and translate it and be very open and clear and take on real risk. The second thing is it's always a marketplace too. So like if there's only one person writing it, like, your carrier can be very disincentivized to give you a discount if there's nobody else doing it, which is good now because there are so many people looking at this in a more innovative light and sorry, so many more carriers looking at this and going, this is a good risk that, we have a chance to write something that everyone else might be viewing as bad and we understand is good. Now, I think there's a huge delta between, I'd say the whole market where you'd see people like a Mercury that are incredibly advanced at looking at like a parcel level. Where we step in on that, yes, like this is an ongoing project in the same way that like if we all just decided, and I think part of the problem is here, this used to very much be a government led
Yeah.
initiative, call it. Almost all of our infrastructure, when it's relatively viewed at cat risk and how much entropy is happening, how much things are degrading over time. Yeah, we look at our roads, we look at our power lines, we look at our beaches, we look at like our sea breaks and stuff. I look at Katrina, where there was essentially forget the name, like the basically like water breaks, levees, all of that stuff used to just be like, yeah, we paid our taxes, that got done. And somewhere along the way, our government has gotten bigger and bigger. It is more complex to run these infrastructure projects and to manage them. And they kind of get pushed more and more into the private market. And so I like to say, like, it becomes our job to manage these things. And so, in that matter, to your point, I hope it doesn't happen. But maybe some point in the road. I mean, we have a lot of potholes up here, but like, if you just went, we're not going to manage the roads anymore, there would just be complete degradation over time and they'd be completely unusable probably after a good 7-year period, maybe like 10 years. And so like that, you have to look at it on your own property and go like, if I'm going to do nothing for 10 years, like it's going to be degraded to a certain point. And so I think the important part, like you're saying, is what is the affordable way that we kind of like thread that needle and go, what is the minimum viable cost for the maximum benefit we can get? So, no, it should not be moonscaped. It should not be completely nuked and look horrible. It should be, okay, if we have a cypress next to the property and we have like brush that goes back pretty far, what is a way that we can do this affordably over time? And they are asking us, and we've been, sorry for the bad pun, and we've been drinking from the fire hose, like expanding extremely fast. And so we used to do that site assessment by hand every single time and like go out there in person and like view these properties. We found that satellite is not high enough fidelity and you have too much street cover. So it'll be coming out soon. We have this 3D printed rover that we essentially created that we can put in a UPS box. It's free, and we basically can now ship it out. It has LiDAR and a camera on it. We can do a complete rove of the property. We can either control it remotely, or do it autonomously if we have good geofencing on the property. And so that allows us to kind of give these updates. But I think it is critical for us. We take a very strong stance being like on the brokerage side, like the only thing that's going to happen here, and this is a complaint we commonly hear, oh, isn't this just going to raise my insurance? The only thing I can promise you is like if you're not giving transparent information from a ground level, they're going to default to the most conservative option, which is what does Google maps say from 3 years
Right.
ago, and it's going to hurt you. So that is where we're kind of like taking this huge proactive view, going like, again, what is an innovative technological way that we can actually fix this problem? And then, I don't think it's something that necessarily, it's hard to say I can give you a single prescription for every single property, but like, it's not something we're talking about. Like you have to cut down every tree every year. It's normally like, hey, here's a big set of work. Let's figure out how to finance this, get it done. Or even it's not that much, we can figure out how to do it off of our discount alone. And then it's less and less every single year because we're able to just kind of like compound that benefit.
Got it. Got it. Okay. Okay. Cool. 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 Now, Andrew, the carriers you're working with, is it a combination of admitted and non-admitted, or is it strictly non-admitted carriers that you're doing business with?
It's a combination of admitted and non-admitted now.
Okay. All right. And I know, in the admitted market, we've got, like, for example, Chubb. Chubb is out there, and we'll get
Yeah.
calls and say, "Hey, OP, can you please go out there and confirm?" Right? They've already granted the policy, and then we'll go out there and confirm some of the things that have been done, so the homeowner can get their discount. Right? In California,
Yes.
it's that process, right? When you're an admitted carrier, and are the non-admitted carriers, what are the biggest differences there, that you're able to see? I mean, non-admitted, there's more flexibility, likely more cost also. Um, but I think for a lot of us that, like when I first bought my home, I was in the fair plan like by default, right? I wanted to get the heck out of there as soon as I could.
Yeah.
And non-admitted was a good option. Like that was my only option. And I'm like, I had to do it because I wanted to get out of the fair
Yeah.
plan. And I think especially some of the people that have suffered a fire loss and have had the unfortunate experience of having the fair plan, these people can really attest to, like, why it's important to get out of the fair plan, right? Because the pain is so severe.
Yeah.
But for a lot of us that don't know, we're just like, oh, I have insurance. It's all good. If it comes through, it comes through. Not understanding the full impact of the financial commitment you're making, to, if your house goes down, like you are going to be out of pocket, right? A significant amount. But so why don't we talk about that? What is your thought about the fair plan, and why should people want to get out of it?
One is going to bankrupt the state if we're not careful.
Mm,
Yeah, it's supposed to be an insurer of last resort, not like basically, hey, it's an affordable product, but it's affordable because it's underpricing. I think, sorry, I'll go deep down my rabbit hole. So now it's your job to shut me up and go, man, you're going
let's
too
go.
crazy. You're gonna
Let's go, man.
all the listeners are going to fall asleep. I think there's kind of a wild thing happening. So I'm from Pasadena, California.
Okay.
I had 13 friends who lost a property in
Oh no,
Altadena
man.
and Palisades. Of that, 8 of them were underinsured or not insured at all. Now, here's the crazy part. All 8 of them are fine. And why are they fine? Because they all, after I talked to them, went, well, yeah, we already had law firms reach out. There's massive subrogation going on. We're going to get everything paid, actually, probably even more, off of this lawsuit. And so here's the real crazy part. I think everyone's looking at the FAIR plan right now. That's not even the main insurance vehicle for the state. The main insurance vehicle is becoming the utility companies. And now here's why it's a bad thing, because if we keep just going, yeah, you know what, reverse condemnation, this is great. We can just sue the utilities. we all end up paying for it. Everyone's rates start going up. And what is that? That's insurance. That is taking a single event that happens and distributing it across a massive pool of people to make sure that it gets paid for. Now, I have to say, when I look at someone like PG&E and like our partners there, they are phenomenal in how much they are moving forward to mitigate this risk because they're being forced to like subsidize it. And so the amount of money they're pouring in to do projects and to make sure that they're hardening their lines. And obviously, utilities are an incredibly important part, probably the single biggest controllable ignition source we have at this point in time that we can mitigate. So sorry, I went down my rabbit hole on that, but I think unless you fix that problem first, you're going to keep having a weird insurance market where it's like, yeah, everything just gets paid for no matter what, even if we don't mitigate that risk. Aside from that, like when you look at like the admitted, I think it is a very, very wide blend of what's out there. First thing you should look at, if you have a non-admitted carrier, there are incredible non-admitted carriers, and then there's some that are like, all right, this is pretty wild stuff. Like you may actually want to go back on Fair Plan. Everyone we work with, you're talking about like $8 billion balance sheets up to hundreds of billions. Like they're massive companies, well capitalized. They might have 100 years of underwriting history. Like they're incredible. So understanding like what is the financial position of that company, okay, that's the first thing where I know like, all right, I know there's going to be solvent if there's a huge event. Second thing is a non-admitted company is going to have a lot of flexibility over an admitted carrier and being able to say like, hey, we love the guys over at Frontline Wildfire Defense System. So, like a suppression system like that, where they go, that's something new. They have their own data. It's great, but like it's not widespread in terms of like the market knowing about it. And so that's where like you can get admitted carriers who really understand the science behind that and go, oh yeah, this is incredibly effective. Like this is how it worked, and being able to price that right. So I think that's where it works well. On the admitted side, that's where the market always moves to when it softens. And I will say we are seeing a softening in the market. When I say a softening in the market, it means all the rates are coming down. And that's mostly, it has actually nothing to do with wildfire. It has to do with the fact that we haven't had any landfall hurricanes for probably now 2 years, which means they didn't experience big events in wind. So they have excess capital. They want to get more wildfire premium. And so more carriers are moving back into wildfire, which lowers the rate. But I think overall, we have seen important moves in terms of like large scale mitigation in the state, and being able to like understand the affordability of it. So that's why you see most of these admitted carriers starting to move back in.
Got it. Got it. Okay. Okay. Great. Now, you'd mentioned that the utility companies are making significant investments in minimizing their risks. Can you give me some examples of what that looks like or what they're doing?
Yeah, one of my favorite ones is the Grass Valley project. So, there was a lot of work done there by the state, by the utilities, on, doing fuel reduction along the lines, hardening those lines, doing fuel reduction in those areas. Now, the important part that we saw was like, all right, the last thing we want to do is have this work done. And, all these people in this area basically just, maybe some random few get an insurance discount. So it's looking at it going, okay, what was the larger scale work that needed to be done here? How much of that was done? How much does that affect like the ignition problem and then also like the compounding conflagration, like how it spreads? And then being able to translate that to multiple carriers, go, this area, if you look at it on Google Maps, like it may look not that different to you than you'd think of like a wildfire area. Here's 100 reasons why it isn't. And we've already just started to see time after time again, the carriers go, yeah, we get it. This is a completely different area. We understand why this becomes fightable. And, again, I think it comes back to a very logical statement we're making to the carriers. We're not telling them like, hey, we have some magic model that, some black box that you got to trust. And it's all going to be better if we tell you it's got a score of 1 instead of 5. The way we're looking at it is, hey guys, we're getting on a call with you. Here's the fire chief from the area. Let's explain the fire history. Let's go through that. Let's understand where past ignitions have happened. Let's understand what the utilities look like in that area. Let's understand what the problems were for that fire department where they're saying, hey, beforehand, if a fire breaks out, there's no ingress egress up here. It's going to break out at this ridge. And if it hits these homes, it's going to spread rapidly down this direction. And the wind always blows from the El Diablos like down this way. So we know which way the fire is going to happen. And you're a big enough part of the fire community to know, like you can talk to many of these fire chiefs that have sat there for 30 years staring at the same hills, and they will tell you to a T, fire's going to break out here. It's going to spread to this area. If it gets past here, it's going to be uncontrollable. This is where the only place we're going to be able to stop it. So all we're doing is going like, hey guys, we need to make this a fightable situation for you. Like, where do the fuel breaks need to be? Where can we get ingress, egress? Where should we put in some sort of methodology here that would break up the momentum of this fire and give you guys a fighting chance? And once we do that, again, then it becomes a much different conversation for everyone in that area and every carrier that wants to write there of going, okay, we're starting to get a handle on this. Like, we like this. And now, each of these individual properties are doing their work. This is a much safer area to write.
Boom. I dig it. Andrew, let me ask you, man, if when a homeowner gets a hold of you, or a business owner or an HOA, and they said, hey, you know what, we want Rock Rose, to be involved in this. Are you guys like you had said earlier, you're having conversations and engaging, I think, the carrier with like, hey, here's the data, but are you engaging like the risk managers from the carriers to say, this is our case for this home? Because the other part of it is in dealing with brokers. Sometimes it's like, hey, we have 30 days to get this home insured, right? We got to do it fast.
Yeah.
And so now it's like there's a time crunch, right? And I'm sure you feel it. And then, so are you, are you presenting the case of, hey, the homeowner's going to do this, or is, promised to do X, or has done it. And I guess my question is the intention to be very deliberate in the delivery of, hey, here is the risk profile of this property and here's why you should insure it? Or does that even matter? Are the risk managers or the underwriters going, hey man, I'm using my own data, I can see you're in this area and we don't like it, denied? Like, there's a big difference there, and I just don't know what's actually happening with the underwriting process.
Yeah, it's almost the opposite of that now. So now it's like, hey, we go to the carrier, we have a strong relationship. And, generally looking at it, they're like, hey, we understand this area is now very aggressive about the way they want to handle mitigation. So, if it's Santa Clara or something like that, they're like, there's a regime here almost now that's like really attacking this problem. There's a lot of community leaders that are like coming after it and making sure to focus on it. So you get this kind of, again, that macro benefit. Where I'll say it is a very, very back and forth, like fluid conversation that we have with a carrier, because every client's different. If we're talking again about like a HOA that might be in an area that is lower income, still needs insurance, like we're gonna try and figure out like, okay, here's what's been done. Here's what we view, here's our view of that, here's what we view the reduction. Do you guys believe that? And it's not one carrier, it's, dealing with multiple and going like, who believes this and who believes it for like, this
Right.
amount. And what generally ends up happening is you have, and this is actually a very important part to understand the whole problem. No matter what, even if a carrier knows a risk is incredibly good, they're like, this is a perfect, these 50 homes are perfect. They can't write all 50 of those homes. The
Boom.
regulators that sit behind them have aggregation risk issues, and they will never let them do it because there's even a 1 in 10,000 scenario where all those homes burn down. So a
So
critical
let's
part of
talk
what
about
we're doing is like
aggregation. Let's
talking.
talk about
Yeah, yeah,
that.
please.
Right?
Yeah.
Explain to the standard homeowner as to why won't the carrier insure all of us, right? If this area is a good risk, elaborate on that.
Yep. So every carrier that has a rating, a credit rating, they generally go to one of two places, either AM Best or S&P. And AM Best and S&P use the same tools to understand what their risk is. And they have a very important job. Their job is to go, we need to make sure that if a huge event happens, you don't completely run out of money. So a bunch of people you promised to pay back don't get their money back. And so no matter what, they have to be very conservative at a certain point where they go, this might be a concrete jungle and look like that. But at the end of the day, there is still an insanely random tail probability that this whole place could burn down. So we just cannot let you write too many homes, too many properties, too many things in this area. And that's why it becomes critical to like have a panel of people that you can write with and almost go, look, we're going to bring in 3 insurers to this area that all love it. And we're going to divvy up the homes between those. And they should all relatively be the same rate and same coverage because they are all trying to work together to compete for that same area. And so it's a hard problem, but it's why I made that comment about like, well, a fair plan, like it could bankrupt the state because if you have too much
Mm.
concentration of risk, there's just not enough premium. And that's the point that we saw happen. And it's still happening in the state. Yes, there is a price for every risk. The problem is that price can be so insanely high that it's just not affordable and no one's ever going to pay it. And so you get to this point where it's like, I think there was a call it a couple of years ago where it's like, oh, we can just keep charging more rates. There is a certain price point where we hit it and we go, there is no sane rate to pay here. It has to be mitigated. It's more important for us to fix it because that's the only sustainable way forward. And that's kind of what we view for the fair plan as its total solution. Like there is not a sane price that can be charged for an entire block, that of 10, call it $3 million homes. I just want to do nothing about the risk and go, but we want to pay 15 grand a year. We want to pay 7 grand a year for insurance. And any of us can do that math. Like, how many years do I have to collect that premium before I recover a $3 million loss? It just doesn't work out mathematically. So you have to like bend that curve and go, okay, what money can be spent at a minimal amount that maximally affects what that probability of it burning down? And they call it return periods. Like, how many years until this property burns down is a okay way of like thinking about it. Like, is it once every 50 years? And that's all you're trying to do is go like, we are just extending that curve so the affordability of it is there.
Boom. Okay. I've got a handful of more questions. And because I'm on you know, I've been in the disaster restoration side for 30 years. We've been on the prevention side for about 4 to 5
Yeah.
years. Um, a lot of homeowners are steering away from filing claims, right? They don't want to be
Yeah.
dropped, right? So like, water damage, right? They're like, yeah, no, no. How much is it? Approximately 30,000. Okay, I'm going to pay for it, right? My deductible's 10. I'm going to pay 30. Like I don't want any trouble. Don't want
Yeah.
to don't want to bother the insurance carrier. And I think that could be intelligent, right? But my question is, if the homeowner were to file a claim like we did 10 years ago, right? Frequent, you got water damage, here you go. I'm just going to file a claim. The carrier's going to take care of it. I think those times have changed. And so if the premium goes up, someone's paying, say, $10,000 a year, they have an insurance claim, premium goes up to now, hey, you're paying $12,000 a year, for example. My question is, in your experience, if you're paying now
Mm.
$12,000 a year, is that premium ever going to be expected to come back down? Or are you just now going into this accelerated place of like, hey, you're paying $12,000 a year per year, per year, per year, and then it just escalates from there? Or is there a place where maybe this can drop back down? And now we're talking about claim frequency versus wildfire prevention, but I think there's a combination of things there. So my question is, if someone's rates go up, what are the chances of them coming back down eventually?
It's a marketplace. So your biggest chance of it going down is another competitor comes in and goes, and sorry, let's separate the two groups. There are bad actors who file an insane amount of claims and are doing it
Yep.
like unethically. And that is someone that is going to just get jacked up and then find it impossible to get insurance. Then there's going to be people who have true claims. They get hit with it. And what's necessary is, okay, there needs to be more people in the market because that means that, like, the more carriers there are, the more chance you have of someone coming in and wanting to charge less money because they think the relative risk is lower than what you're currently being charged there. They can still charge you if you're getting charged 12,000, they can charge you 10,000 and still make a profit off of that, and probably a pretty good one because they think it's just someone misjudged it. I think if we take that back up though to a bigger picture, this is where I think it is so insane where we've gotten to in this damn market, which is imagine if I bought a car and the car works 70% of the time. I would lose my sorry, I don't know if I can cuss on here. I'd
You
lose
can
my
cuss.
ass.
Yeah.
I'd be so upset about that. I would throw, I'd file, I'd probably sue the company. There'd be a class action. Now, if we look at the same thing where it's like, oh yeah, 30% of the people didn't get covered in Palisades for all these nuanced reasons, whatever it is. That is, and we're seeing it right now. Like they're filing RICO charges against insurers, going like, there's collusion and collaboration with
Mm.
agents and stuff. And so you go, all right, one, this is insane. Two, why do I have a 50-page insurance policy or 200-page insurance policy? It's because there's 150 pages here about like all these little sub exclusions and stuff like that. And I look at that and I go, this is nuts. We've gone the complete wrong direction. The direction we should be obsessed with is how do we get I mean, literally, I have an AI system in our company on my phone that I can get to automatically generate a 3D print and put it in with a robotic arm in my printer. And yet we can't go, yeah, but there's got to be an innovative way to make sure our pipes explode less. And so that's where I look at it and go, there's so much opportunity in this market for us to go. There is so much technology, innovation, hardware that we could start to solve these problems and make them very sturdy, adaptable problems that change our infrastructure. Where, okay, now we don't need to worry about sublimiting, water damage claims and losses like that. And instead, it's actually like, oh, there is a real, and it's really interesting. I think you are like a catalyst for this, which is like your company was focused on what it always was, which is a necessary function, disaster recovery. And like, I'm sure you do everything from water damage, mold remediation, all that. All that stuff is
Yep.
critical and it still needs to be there because it still should happen. The problem is the expansiveness of it exploded because we just went, yeah, my 1960s pipes that I just like, I check it when something goes wrong, as opposed to, and what we're seeing your company do, which is like, yeah, you have to upkeep everything physical in this world. It all suffers from entropy. That is a physics, equation that is not, we're not going to get around that law. So if we can start to move into that format, what we're going to see is one, you can have simplified insurance. You should have a 2-page insurance, which is like, yeah, you know what? If you had all of these things that were in place, like we know that the probability of claim is back to where it was back in 1960s. It's very rare, and when it does, we just pay it out every time because it's not a big problem. And I think I'll give one last thing. I'm sure you were close to it. Like, imagine if like this whole like asbestos mold thing, if the response to the market had been like, oh, that was really bad. We're going to keep using it because it's really cheap. And so, but don't worry, we'll figure out a way to price it in. Claims would have gone through the roof. Like it'd be completely uninsurable. Like our homes would just be a mess. Like, no, the answer was like, oh, asbestos is really bad. Like this has to be changed out, paid out a bunch of
Yeah.
money. And now there's like a huge innovation towards mitigating that and never using it. And so I think that's just the critical, it's the only path forward when we look at how we solve the entire insurance market. It's how claims are paid, the frequency, how people relay to insurers. And I think, let me be clear too, the most important part in this chain we view is actually the brokerage, which is like the person who relays to an insured and goes, this is what you have to do. This is the transparent way. We're going to help you finance it. We're going to figure out a way to fix it. We'll come in and cut down the tree or, help with the pipe, like whatever needs to be done. Just because, yeah, it can't all be on the carrier who literally doesn't even have the connection directly with the insured all the time.
Boom. So I want to get back to that on what you guys offer. And before we do that, Andrew, I want to ask you, um, what you just talked about as far as the asbestos example and how laws have changed and that those products are being limited. Um, is there ever going to come a time, in your opinion, or is it even plausible for the carriers to begin to pay for prevention measures, or is it just like, hey, the carrier only pays when there is a claim and when there's a loss? They can't actually pay for prevention. What are your thoughts? And if they can't, should they? What are you thinking there?
I think there's one major blocker to it, which is they don't want to pay a bunch of money for someone to do something and then you leave the next year. So if you start to
Right.
create like multi-year policies, then it becomes like very much a smart financial equation.
Got
I
it.
also think like, look, again, I think we're seeing a very weird thing happen. Like, I'll just use California as an example, where like the housing market hasn't been hit as hard as it should be, considering the relative change in price for insurance and also just like the relative probability of like, yeah, these properties can burn down and it cannot be there and it could be, a nightmare. Where these kind of forcing functions that happen from an economic perspective, if they get delayed and get like pushed back, it doesn't change the behavior in the way it should. And so, yeah, I think probably like the best option for that type of thing. And to be clear, I am seeing insurers like put money into larger areas. Like they want to do like larger project areas, but they have to be able to recoup that at some
Yep.
point. And the worst thing that can happen is you have a great actor come in and go, we're going to spend $2 million and do the fuel break. And then someone who's just, like, oh, yeah, we don't spend any money a year doing it. And they just come in and write it for 10 cents cheaper and steal all that business.
Good point. Good point. Yeah. So we have to, and I think, our message to the homeowner is, hey, let's make our own home as attractive as possible to as many carriers as possible, right? To just say, hey,
Yeah.
we made the investment ourselves. Like here's the certification or the list of work that we've completed, and let's go shopping and see who can give us the best coverage and the best price. But now let's circle back to the work that you actually do and the services you provide. You mentioned that you help people get financing, number one. I heard that. Number two, you help people get the work done, and then you help them get insured. I think that sounds like a full package. Did I hear that properly?
Yeah, that we just stepped into the service side and acquisition of those companies just because, and again, I think it's more just from a default of there's so much that needs to be done
Yep.
and so much work. And ensuring that we can, the part that kills us is if we see, hey, there's something that can be done here, and then you kind of get, bids coming in that are arbitraging the situation, for lack of a better word, where it's, you're getting price shot, the roof is going to be, 60 grand. And we go, that's a $30,000 redo. Like, don't. And so stabilizing the market, I think it creates that kind of healthy mechanism where you go, okay, like everything can be fixed at a reasonable rate. And again, yeah, I'd shout them out again, the guys at Pillar. And I think there's some others really looking at that, but the, it was one of those things that I've always screamed about. Like, it's such a no brainer that like, if I have a home, if I have $1 million home, that home's now less insurable. I can't find insurance on it, and it's going to burn down more often. Shouldn't that home be less valuable? So shouldn't the one person who wants it more than anything is like the bank to go like, yeah, we'll give you a HELOC for 15 grand at a super low interest rate. If we know it's all spent on making this property worth $1 million again, or maybe worth 1.2 now because everyone around them didn't do that stuff. Or, we see other homes that haven't done it. And we know that this is a much better home. It's a much better offer.
Wow. That's pretty awesome. It's funny because I talked to colleagues throughout the years, and once we harden a home and once the homeowner's committed to really doing the work, like I have the first, I don't know if you know this, but I have the first wildfire prepared home plus designation in California.
Really?
Yeah. Yeah. And so when I got my certification, I was so proud. I'm like, I'm going shopping, man. Right. I'm going to see what carrier, and State Farm stepped up and they're like, yep, we'll take you. But to me, like,
that's great.
I thought if we can get, you're shopping for contractors to do the work. I was thinking, darn, I should start I should begin to insure these homes, because some of these homes I know are not going to burn. Like, I will pay money, right? Like, I will insure it because I can stand behind it. But that's kind of the thought process, and just kind of like backwards of what you guys are doing. I think it's smart. Look, if you're able to provide the insurance and you're able to provide these services to the homeowner, I think it's fabulous. We had one high net worth carrier. We went out and did a wildfire prevention assessment, and Mrs. Smith says, "Oh, great, you guys are here to take a look at my gutter guards and the vegetation." And I said, "Yeah, like what? Who did these vents?" And she just had the vents done. And she says, "Oh, I had this company do the vents." I said, "Okay, what happened?" She says, "Well, the carrier said I had to do all these things." And I said, "Okay, well, they didn't give you any names?" She says, "No, I just jumped on Google and I figured, like, who could do the vents? And that's how I found you guys. Who can do the gutter guards?" And I'm like, oh my goodness, man. Like, now you have the Wild West of people doing things that, and some of these guys out there right now are like, oh, we do this work. And
Mhm.
like, man, if you don't have alignment with what the carriers need or IPHS alignment, man, the homeowner could be doing the best they possibly can to make the investment, but without the right guidance like you guys are providing, like, they could be left still with not enough coverage or not checking the correct box to be done because the carriers are not advising the homeowners on which direction to go to get these things done, you know?
Yeah. Look, it is the Wild West right now, and it's so. I mean, you can find huge polarity between it, where there's people like you who are doing incredible work. Like I was like, you have a podcast about this. Like you're obsessed with the problem. You didn't just go like, oh, this is a new bad problem. Like I'll set up my contracting license, do this on the weekend for fun, and like, I'll just take the most expensive job, and I'll throw some mesh on there, and hopefully that's good. It's an obsession, and so at the same time, I think you'll agree with me. There is such a massive amount of work and need for it to be done. Like there's almost infinite scale. Like we're not worried about competition on the insurance side, on like the service side. And I think it is because what I said, like this used to be a government function. It used to be an entire government like division, if you'd call it that. And that's kind of like disappeared. And so there's so much room for us to grow into that and like find the right people. And what I found, what I love about the fire community, it is more than anywhere. Like it is a self-isolating vehicle. If you're a bad actor, like your name gets trashed immediately. And like the fire departments, like all the other mitigation companies will like really like isolate. And if you're good, like people respect one another and there still can be competition. It's just like, I love that part about it. So yeah, I still think there needs to be standardization.
Yes.
I wish there was an easier way to just go like, yeah, here's like the standardized list. Here's every single job they've done. Here's the ones that were good and bad. And like, that's your statistical, like, here's your happiness score. And like, here's the effectiveness score. And here was their insurance change, which I think can be done over time. But, it's like any emerging market. It's kind of all over the place at first.
Yes. Yes. Now, Andrew, as we close, is there anything that you would like to leave the listeners with regards to Rock Rose risk or anything else that you're working on, that you want the customers and clients to know about, and then also how they can get in touch with you?
Yeah, I would just say if you have not seen some change in your rates, like you need to reach out to me or your broker. Doesn't matter if we get it or not. Like there is a fundamental shift in the market we've seen massively because of what I said. There's a softening in the market, but just because also there's a lot of carriers that have moved in and realize this. So like, do not sit passively and be told like, oh yeah, there's nothing you can do. You're in a high wildfire zone. It's absolutely stuff you can do. It might be a lot, and it might take us like coming into the community and figuring it out. And you can reach out to us, via website or LinkedIn or we have a multitude of ways to channel into us. But yeah, it's just important to not give up and think that like, oh, you're the isolated case that this won't work for. We have yet to find that.
I love that. I think you leave us with hope, because for a couple years now, right? There's been like the carriers are leaving. We're stuck with whatever we got, and it's really
Yep.
nice and refreshing to hear that there is some softening in the market. There is some softening, and to hear it from someone that is out there every single day, I think that brings hope for people because all they've been hearing is it's a hard freaking market. You're gonna get what you're gonna get. Too
Yeah.
bad, so sad. Deal with it. But to understand that, hey, look, if I can be responsible for my community or my property and document it, then I have a better fighting chance. And I have, someone, like Andrew that'll go back and present this, the work that I've done to the carriers in masses and say, hey, look, who's willing to partner with us and take on this risk. I think that's very hopeful. And I think for people, time to really look at, being proactive is not sexy. I totally get it. And everyone's on to the new thing or whatever they want to focus on. But protection of your family really should be always at the top of our
Yeah.
list. And I think to me, like that's the thing. The thing that really concerns me is, when there's an ignition near my home, I want to be there. Right.
Yep.
And the fact that the chances are I won't be there is the reason that I did the work that I did because
That's
my
well,
family's
well
there
put.
and I'm not there, man. Damn, like they need to have a fighting chance. In addition to leaving, right? We want our home, our sanctuary to be as safe as possible. And I think a lot of us have to put that back on the top of our list to really solidify what we want for our families and for our homes. So, Andrew, man, thank you very much, brother. Is there any final thoughts you want to leave us with?
No, just thank you for your work and what you're doing, and appreciate you letting me come yap for a while.
You got it, brother. Thank you so much. We'll talk to you soon.
Sounds good.
That's all for this episode of All Things Wildfire. If you like this episode, be sure to subscribe to our show and follow us on social media to stay up to date on all things wildfire. And as always, thanks for listening.